Good morning, folks. This is Naeem. I'm Chief Market Analyst at Ameritrade, and welcome to our daily technical analysis video. Today is Monday, and that means we'll have to have a look at the Dow Jones Index and have a look at the index from a perspective of the respective like support and resistance levels, and how and where the index can really move throughout this particular week, and what fundamentals and what factors can really drive that sort of a price action. So let's have a bit more conversation around potential support and resistance levels in relation to this price action. But before we do that, as always, it is important for us to go through this slide of disclaimers and risk warnings. So anything which we'll be discussing in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as you may know, that the earnings season did start last week for the US stock market. We have seen the earnings from all the major banks with the likes of Goldman Sachs, Morgan Stanley, Citibank, Wells Fargo, and Bank of America. Now, of course, the earnings season is also something which is going to kick in. I mean, like it has already kicked in, but we will hear a lot more on that this week and the next week as well. So especially next week is going to be a lot more focus on the tech earnings. So that is what is going to really drive the markets higher. I mean, this particular week we'll also have the earnings from Tesla and several other tech companies as well. So that will be very much in focus among investors and traders who will really like to know how those stocks are really faring during this pandemic time and what it really means for the stock market as well. Now, when we talk about the Dow Jones Index, obviously we are speaking of the top 30 American companies, and so they very much together make the Dow Jones Index. So the question is that where do we see the index moving? Will there be a more upside move for the Dow Jones Index, or would this is it, and the index is going to move lower from here? So that is what we are going to look at with respect to the price action. Now, when we look at the Dow Jones price on the daily time frame, what we see is we see three important moving averages. Number one is obviously your 50-day moving average right over here. That is your simple moving average, and then followed by that is we have your 100-day simple moving average, and finally your 200-day simple moving average. Now, of course, it is quite easy if you're looking how to draw these moving averages. The very simple way of doing that is go over here. It says insert, then go to indicators, and then trend. From trend, we go to moving averages. Here we can change the moving period, and then M&A method, I tend to keep them always simple. And then for green, I always use, for 200, I always use green. Now, with respect to the RSI, what we see with respect to the RSI is that the RSI is still trading in an upward direction. As you can see, there is no significant weakness with respect to the RSI. So that shows that, and remember with the RSI, you have two different levels. One is 70, the other one is 30. The 70 is associated as an overbought, meaning that the market has gone too far too fast. And then with respect to the 30, that means that the market has been sold out too fast, and market has gone in deep into over sold territory, meaning a correction is very much due with respect to any derivative. So that is just a general rule. So whenever the RSI comes over here, like you can see right over here, that means that the price is very, very likely to move lower. So as you can see over here, that the price did move into too much overbought zone, and then followed by that, what happened was we saw a correction. We saw the stock market moving lower, which was very much indication from the RSI that the prices have gone too far, or the market has become too expensive. And then, with the moment that we reached into an oversold area, which is right over here. As you can see, we saw that yes, the market is very, very oversold, so we could potentially see an upward direction, and that is what we've experienced. Again, over here we can have the confirmation of the same argument over here when the price did move into an oversold territory right over here, and then we saw the stock market also becoming overpriced, and there was an indication that now the market can really be sort of moving down from there. And then we did see that the market did move to the downside. The market didn't really go all the way to here, to this oversold territory, and then it started to move higher, and then we saw the moment that the RSI was moving higher, we saw the markets also moving higher as well. So again, these are quite a powerful indicators. They are quite good indicators to keep an eye on. But one important sort of a pattern that we are about to see is what we called a double top. That is when the price comes into two different zones and it fails to break to the upside. So if the price fails to break to the upside, if it doesn't go to the upside and it starts to move lower, then that means that this double top pattern is very much in play. And when these double top patterns are in play, what it usually means is that the price is going to complete its projection, and the projection is the high and the low from that double top. So this being your low, this being your high. So what it really happens under those circumstances is that the price usually tend to complete its pattern. If that happens, that means we are really looking at this line is pretty much approximately to this length. If the price breaks out of this zone to the downside, then that really means that the price can really go over here as for your first potential support zone, and then the price can really go over here as well, your second potential support zone. But for now, we are trading near this particular zone. The price did see a small retracement, the price retracing towards its 50-day moving average, but then it quickly recovered and it started to move higher. So with respect to our support and resistance zones, this remains our immediate resistance zone, and with respect to the support, this remains our immediate support where the 50-day moving average is trading. So as long as the price continues to trade within these zones, we do not have a much trade but to continue to trade in this zone. But if the price breaks out of this, then the next support zone will potentially be just below the 200-day moving average. And if that doesn't work, then we are really looking at our 200-day moving average, which is right over here. So let me just mark them on the charts for you right over here. This is your support level 3. This over here is your support level number 2. This over here is your support level number 1. This over here is your resistance level number 1. So that's all for today, and I'll see you guys next time. Thank you.